There are major issues. The financing environment's really terrible. It's been terrible for a couple of years. If you read the statements by Patrick Valent, you'll know that he's in favour of trying to sort all that out.
Okay, at what point with that do you tend to think kind of pulling investment out of the UK?
That's such a good question. Funnily enough, I'm super positive about that. I'm very optimistic about it. And actually, there's no shortage of really, really good companies to invest in coming out of the UK.
Hello and welcome to Leading Beyond the Lab. Today I'm really excited to be joined by Clare Terlouw, head of LifeArc Ventures. What advice would you have to aspiring scientific entrepreneurs?
Sometimes you get scientists who come to you, they're the first ones to be able to do this, and isn't it great? And you sort of think, well, So what? We want people to be able to say, this is my thesis, and if I'm right, this is what it means to patience. Building a portfolio now of 19 companies. But all of that is super exciting. You get the ups and the downs. Biotech's never a straight line.
No.
But that is what makes it exciting.
Yeah. So what are the key factors that you consider when looking to make a Series A investment?
Well,
Hello and welcome to Leading Beyond the Lab. Today I'm really excited to be joined by Clare Terlouw, head of LifeArc Ventures. Clare has been shaping biotech through investing in early stage science that makes real world impact. From pandemic born innovation with the likes of RQ through to companies that function through platform growth like Maxim Therapeutics, Clare has been pivotal in building a fund and a portfolio that effectively spans a variety of indications and therapeutic areas. So I'm really looking forward to diving deeper into all things investment philosophy, the future of the translational biotech landscape in the UK and wider Europe, and looking at what it takes to back great science and the people that sit behind it. So welcome.
thank you. Thanks for having me.
So I'd love to start this podcast, Clare, with asking you what in your words, from your insight, sets LifeArc to be different to its competitors in the early stage investment space?
Probably the biggest differentiator is that we are part of LifeArc, which is a medical charity. So particularly in the UK, there's maybe one or two other charities that have venture funds, but LifeArc's a very large medical charity. We're very well capitalized as a result of our royalty stream from Keytruda. And so our unique factor is that we have a very strong venture investment program that's quite large in terms of size of capital. And that really sets us apart from others. So although we work together with many different venture investors, GP, LP funds, and we co-invest with them. The biggest difference is that we're a balance sheet fund. So I guess you could think of it similar to like pharma CVC, but instead of pharma, we're a medical charity.
Yeah, and I suppose with the medical charity angle, is there more of an influence leaning towards how meaningful it is and the impact you're making, things like that?
Yeah, so that's an interesting question because we are a charity, everything that we do has to be in line with the charity's mission and aims and vision. So all of our investments are in line with that. However, the charity itself is focused on funding translational research and treatments for rare diseases and drug-resistant infections. And that's the focus of where the funding from the charitable side is going to. On the venture side, our remit, or the reason that we exist, is to generate financial returns for the charity that goes back into the balance sheet and becomes part of the charity's sustainability strategy. So it's really important for us that we're not restricted to just one or two particular areas. Because obviously there's really great investment opportunities outside of those two areas. So as a venture fund, our focus is on generating financial returns for the charity, and we can invest quite widely. We can invest in basically any life sciences area that we think offers attractive potential financial returns.
Is there? That's really interesting. Is there any ways that, for someone like you who's worked in various funds or various venture capital companies, for example, that your approach or changes within that?
I think it depends. It's more. I think the approach changes more on the mandate of the fund, and that comes from the LP base. So if you're running a GP LP fund, then you have an LP agreement, so an agreement with the people that are funding the fund as to what your investment mandate is. So what kinds of things you'd invest in and how you're going to go about making money for your LPs. With us, we have an agreement with the charity that we will invest in line with the charity's aim and mission. And that's our responsibility. So in terms of how do we compare to other funds in terms of our mandate, it really comes down to what the fund manager agrees with the LPs that are funding them.
Yeah, makes sense actually. From your career, which spans a whole range of successful investments at different stages, are there any that stand out that you're most proud of?
That's a very good question. We're a new fund, more or less. I mean, I think we started around 2020, and so we're 5 years into building that fund. And we now have 19 companies in the portfolio. We've invested in more than 19 companies, so we've wound down a few companies, which is absolutely to be expected in biotech.
Yeah.
And we've sold 3 companies as well. So obviously we're really proud of the deals that we've done and the companies that we've sold, because those have returned cash to LifeArc, and LifeArc can use that cash for more charitable purposes. So that's fantastic. But we're also really proud of the companies that we're building now that are going on to raise more money, because as you know, in biotech, it's all about building enough scientific validation and enough of meaningful scientific inflection points to go on to be able to raise more money to progress.
Yeah.
So for those companies in our portfolio that are now coming into Series A, Series B rounds, we're really proud that we can keep funding those companies. So there's quite a few in that bucket.
Is there any in particular that, from the recent examples, that stand out?
Yeah, so we're, I mean, you mentioned RQ Bio, I think for different reasons. I mean, that company hasn't needed at this point to raise a substantial amount of money, but we're really proud of that company. We've helped build that from scratch in 2021, it was. And very quickly that company went on to do a licensing deal with AstraZeneca, and one of the monoclonals that was licensed to AstraZeneca is now actually a licensed and approved drug in certain markets of the world. So super proud of that. That's an amazing accomplishment. And that company is now going on to work in the flu space, which is really exciting. So really proud of that one for lots of reasons unrelated to being able to raise money, but they've actually been able to deliver a drug, which is, the point of doing all of this. A pandemic relevant time, I suppose, as well. Yes. So the that's an interesting company, because the founders of that company are 4 very well-known and very well-respected scientists who were working together as part of the BIA antibody task force. And in 2020, and when that task force had sort of run its course in the terms of the funding was no longer available from the government to continue that work, they knew that they could develop potentially very powerful monoclonals that would act as effectively instant immunization for the immunocompromised population. And they felt very strongly about continuing that work. And we, as LifeArc, stepped in and helped build that company and make that happen. It's really interesting. And I noticed that one of your recent successful rounds was Maxion. Yes. Arndt was actually on the podcast. Yes, I saw that. Yeah. Small world. Yeah. Great. What do you think companies like Maxion play in terms of their role in your portfolio? So that's a really important company for us, and I think a really good example of what we want to continue to do in the UK. So people like John McCafferty, obviously very experienced, has had a lot of success in his own career, huge amount of scientific gravitas, and when people like John tell you that they're going to build another company, you take that very seriously. And he has an amazing team around him, Anish and now Arndt as well. So, that's a great example of a company that we led the seed round for Maxion, helped pull together that seed round, get that company up and running, and then went on to participate in the recent Series A round as well, which is fantastic. And I think that's a really strong example of the kinds of deals that we want to keep doing in the UK. So what are the key factors that you consider when looking to make a Series A investment?
from your perspective?
Well, I guess probably stepping back a bit, we invest along the life cycle. So we make seed investments, Series A, Series B investments. So we can actually do first check-in to Series B rounds. Historically, our preference has been to be in as early as possible. So typically we like to be in right at seed stage. But lately, because of the funding environment, there's been some really, really good companies that we've had the opportunity to join those rounds at the point in time when their lead might be heading into the clinic.
Yeah.
That's more likely to be a Series B round. So what we're looking for from companies at seed, Series A, Series B are different things. Because they're generally just at a different stage of development. So your question was more about Series A companies.
Well, I suppose you're right. I think if you take a step back, I suppose it's about looking at the considerations that you look for any company or portco.
Yeah.
And then how does that differentiate between the stages is probably more why should the book
Yeah. I think that there's some sort of buckets that we look at.
Yeah.
The number one thing we're looking at is the science. Right, so everything comes down to the science. Is it novel? What work has been done to prove out this thesis so far? We really dig deep into the background of, so where did it come from? Has it come out of an academic lab? Who are the founders? That then links into the people.
Yeah.
So for early stage companies, it's not uncommon that you might have scientific founders who, some of them are interested in building a company and being involved in that entrepreneurial journey, and some of them aren't. And so understanding that about the founder and providing resources around the founders who don't have an interest in running a company is also really important to understand. So the scientific founders, really important. And then other founder members around who are maybe experienced more in drug development or in other areas of R&D, for example. So it's really people, science. We're not so bothered about location. Location can have its benefits in terms of like tax structures, R&D tax rebates, that kind of thing. Sometimes those companies grow. Certain areas of the world have better links into skills, skill base, or people have maybe done similar jobs in biotechs 2 or 3 times before. So you have to sort of think about that. But for us, we can invest anywhere in the world, so location's not a huge hurdle for us.
At what point with that do you tend to think, we need a seasoned CEO, for example, in the lifespan of that company?
Well, generally, the really experienced CEOs, they're not going to join a company that's very young and not very well financed, or very, very risky. Sometimes they do if they think it's really, really novel and they think, this is something that I want to attach my name to and I believe I can add value to. But most of the time, seed stage companies, early stage companies, they might have a CEO who's experienced at that part of the journey, because that's a different skill set. That's all about preclinical work normally.
Race to the clinic.
And there's people who really love that. And then they know, like, they're not the person who's going to take it into the clinic and then eventually do, a big BD deal or an IPO or whatever it is that the company wants to do. So what we do is we spend a lot of time trying to understand, what do the founders want? What kind of support do they need? Are there people around that we can put in to lead the company until we get to a certain set of milestones where we know that we can raise a larger amount of funding and then bring in that more experienced CEO? So, those things go together, right?
Yeah. Are there consistencies around, every CEO is different, every C-level appointment and leadership appointment is different. Are there kind of consistencies around things that you look for from your experience that would be good for our listeners to hear?
For CEOs specifically?
Yeah, I think so, yeah.
Well, again, you're going to hate this answer, but it kind of depends, because when I think about all the different CEOs across our portfolio companies, we have CEOs who've never done it before.
Yeah.
And we love them. They're great. They've just got this fire. They're super enthusiastic. Maybe they're
able to learn.
And they're so smart. They're just incredibly smart, motivated people. And and I don't have any bias towards whether you've done it or not. And I really feel like when you have someone who is a leading thought leader in a particular area and has those skills and experiences and wants to do the job of CEO, then we should really consider that. Whereas with other companies where you're building maybe, a really big biotech with multiple programs, you're going to need multiple pharma partners, you need to have, this is going to be, a big cross-border operations, you might want to bring in someone who's had the experience of running big biotech before. So if you look across our portfolio, we have various people depending on where that company is in the journey.
Yeah, I suppose it all depends on the person, the team, and the people around them, I suppose, as well. Because if you've got an incredible CMO, CTO, CFO, a good CEO probably learns from those people anyway.
Yes.
It feels like its own ecosystem almost.
Yeah, I mean, because some of the companies are so small that they either don't have a CFO or they have a fractional CFO.
Yeah.
So, again, that when you raise the bigger rounds, then you get the full-time CFOs. But, I really love working with people who are CEOs who've never been CEOs before, because it's just really exciting. And
that's probably a bit of a USP for you and your fund, I imagine, because most investors I talk to, they hit an inflection point where they think, right, it's time to bring in someone that's been there and had a successful exit or whatever they're looking to do before, probably to de-risk it in theory, but which I appreciate. Can work, can't work. It depends on the approach you're taking.
Yeah, I mean, like I said, for the bigger plays where there's very high levels of invested capital, raising 100 million rounds, then investors are going to want to see people who have done it before. But for companies that are starting out and growing and raising their first rounds,
imparting that knowledge and wisdom onto a growth mindseted CEO in the making, if you like, is probably a good way to put it.
Because also, I mean, especially in Europe, in the UK, we don't have as many CEOs who've done it before. Like now we're seeing it more, but if you look back 10 years ago, especially in the UK, there was very few CEOs who've gone on to sell companies and then done it again. Like John McCafferty is one of the people I just mentioned. Like he's one of those people who've sold companies. We're working with a company called Cytospire. Natalie Mount is the CEO there. She's been CEO twice before, sold companies. So very experienced people. That's fantastic to see, but we're still building the numbers of people who have that experience in the UK and Europe compared to the US, compared to Boston. So you don't always have the luxury of being able to tap into that resource, but it's fantastic to see that expanding now.
With the UK life sciences sector has been through some challenges recently with regards to like Merck, Lilly, AstraZeneca in one way or another kind of pulling investment out of the UK, which can, when the big companies leave, sometimes it affects the smaller companies that almost spin off out the side of it. What's your view on the UK biotech ecosystem, if you like? I think you have to separate the big pharma dynamics from the SME dynamics in the UK. So big pharma have, obviously been very unhappy with pricing, with the VPEG agreement. I mean, that's very well covered in the press. And, the government is, if you read the statements by Patrick Vallance, you'll know that he's in favor of trying to sort all that out. And I think he is trying to work his way through that. So there's a lot going on in terms of the pricing and commercial environment for pharmaceutical companies in the UK, I think fueled in part or maybe certainly influenced by Trump's most favored nation push on pharma pricing in the US. So that's all bubbling around, and unfortunately there's been quite a lot of negative press and negative announcements, like you say, of pharma halting investment opportunities or moving people out of the UK. So that, I think, is a macro thing, and in some ways maybe the UK just happens to be a sort of pawn on that chessboard, but there are major issues that the government is, I think, trying to work on and I hope can resolve. But funnily enough, if you look down at the
SME base and the research base, I'm super positive about that. I'm very optimistic about it. And actually, in some ways, the more people that have to leave pharma in the UK, the more talent is coming in to that research base and into these companies and into biotech. Now, that's not net positive in a way, because you want both. You want to have both.
Yeah.
But there's no shortage of really, really good science and good companies to invest in coming out of the UK. We're seeing a huge number of really good opportunities. So the financing environment's really terrible. It's been terrible for a couple of years, but I'm hoping that will start to resolve. Like pharma M&A for biotech is pretty good right now. So you're starting to have some companies over the last...
Activity of some sort.
Yeah. And so people who've invested in those companies are now going to be returning cash back to their limited partners. Limited partners will feel better about their investments in biotech, and hopefully that will start sort of opening up the funding cycle again. And obviously the NASDAQ IPO window needs to open, and that's a big part of the whole chain, the financing chain, and that needs to open again. And there's lots of macroeconomic reasons why all sorts of US policies have to sort of resolve themselves for that to happen. But so I don't know about the uncertainty element, and that's, I'm not an expert on what might what might cause the IPO window to open again. But I am really optimistic about the fact that, if you look at what you have as an investor, the opportunities you have to invest, there are very, very many. So there's my answer. So I'm optimistic about the small end, and I'm still optimistic about the pharma side of things, but there's just so many factors pushing and pulling on those dynamics right now, and a lot of it comes out of the US.
Yeah, and one thing that I think from my side, from the, let's say, an Arto perspective on the talent side, is the UK does have a concentration of talent that most countries across Europe don't have, especially in certain key locations. If you look at like Germany, it's kind of spread across Munich, Frankfurt, some in Berlin.
Yeah.
Whereas if you look at the UK and the kind of Oxbridge community and the N4 corridor, where the big farmers are, there's real hubs of talent.
Yes.
Which I see, so a lot of the UK talent now works for overseas companies because there might not be opportunities here, but that's talent that can be tapped into, can't it, when the growth happens or the event happens or whatever.
Yeah.
So what's your view on when that's going to start to hockey stick, as we like to say?
The funding itself.
Yeah, crystal ball time.
Yeah, I mean, like I said, the more money that's returned back into funds as a result of selling companies or realizing returns in other ways, then that's gonna help release some of that funding. But I think that valuations are, more or less sort of settling down now in terms of, with there's less cash around, a lot of companies are raising. Valuations, pre-money valuations have come under pressure. I think we're starting to see those sort of settle out. Insiders in all these different companies have decided which companies they're going to continue to fund or not. And so all of that sort of working its way through now. So I feel like it's been long enough in the cycle that those big decisions about where a fund's going to put money, hopefully have all been made or are being made now. And then when those decisions are made, then fund managers will be able to, and venture capital investors will be able to say, okay, we know now how much unallocated capital we have, so we can start investing in new opportunities again. Because obviously they've had to reserve higher levels of capital for the companies that they own because, the funding environment's been tight, the IPO window hasn't been open. So that money's just been sort of sitting there, reserved in their funds, and they haven't been able to use it or haven't wanted to use it.
And how do you think UK investors like LifeArc can help the translational community of biotechs and things like that in the UK?
Well, one of the things we're doing is we're trying to be very proactive in terms of sourcing potentially new technologies and assets and therapeutics in particular, and being able to talk to funds from around the world about co-investing with us. So because we have a venture fund which invests directly into companies, but we also have a fund of funds investment strategy, which means we are investors in other leading life sciences venture funds.
Mm-hmm.
We invest in funds around the world. So we have very good networks with other biotech and life sciences investors. So we get to see a lot of deal flow through that. We get a good idea of what's going on and who's investing in what and themes, and lots of opportunities to look at some cool stuff. What we want to do is to be the people that are able to find and be able to introduce sort of best of British to funds around the world, because not everyone has an office in the UK, right? So a lot of the big funds, that they don't have people on the ground here, and raising money is an international exercise. I mean, I would love to say that we could fund all of our companies from UK funds, but it's very well documented that it's very difficult to do that. So, we have to be able to syndicate our rounds with international investors. So that's one of the things we look at, which is we have people on the ground. We're based in London, Stevenage, and Edinburgh. We know this market. On the charities side, we fund extensively in grant funding in particular areas, as I said. So we've got really good networks. So we should be able to find really exciting stuff to invest in.
Yeah, I love that. I think as a Brit, it's nice to hear, actually, because a lot of the work we do is international and stuff like that as well.
Yes.
And there is a real concentration of talent that we can leverage for great opportunities.
Yeah.
From your perspective, Claire, what areas of biotech, medtech, digital medicine, tech bio, whatever you want to call it, are you most excited about over the next, say, 5 years?
Yeah, so that's a very good question. Yeah, so many. We're excited about so many different things. We're excited about still quite a lot. We're seeing quite a lot in neuroscience across the board in different areas. Really excited about that. We're also doing a big piece of work on tech-enabled drug discovery. I mean, obviously these days everyone's using, not everyone, most people are using AI, definitely people using computational biology. That's the norm. Mm-hmm. And we see a stream of AI, ML enabled drug development companies. So we're actually now doing a deep dive as to what are the business models that we're really interested in? What tech are we really interested in? Like, how do we assess data? And how do we screen and prioritize all the technologies in that area? Because clearly that's the way everything's moving in the field. So we're really excited about that in terms of saying, here's a shape of a tech-enabled biotech company that therapeutics specifically. Here's the shape of a therapeutics company that's using tech, and this is how we know if it's something that we'd be interested in investing in or not.
Yeah, I've seen there's almost two pots, isn't there? There's the biotech on the therapeutic side. There's the biotech companies that are optimizing through the use of AI or aim to, and there's ones that have it kind of infused and embedded with them from day one almost, and how whether it's like a target identification or whether it's just like looking to speed up drug development through use of AI.
Yes, and then on top of that, you have different business models. So you've got like platform builds where the model is to do a lot of partnerships with pharma, or maybe it's a build even to supply a service to pharma, versus some other companies that are building specifically to generate novel targets and molecules that can be progressed through clinic, to build very large biotech companies from that. So as an investor, you need to have an understanding of how much capital it takes to invest in those different business models, and then what your returns profile is likely to be. And you need to be comfortable not only with the tech and the data component, but the business model, and also then, at the end of the day, if it's an asset play, these still have to go through clinical trials. So you've got to do all the same work that you would do when you're looking at any other drug development investment.
And what advice would you have to aspiring kind of scientific entrepreneurs, currently perhaps in academia or something, and they've got this molecule or asset and product that they're super excited about, but the idea is in its infancy? So for someone that's often involved at seed stage, what advice would you have for that person and his friends and or team that are looking to make it and to have a successful company and make a difference.
Yeah, we see a lot of people who are in academia or in some of our scientific institutions who have great ideas and asking the same question, which is, do you think there's a company here? And quite often, this happens all over the world. You have scientific research that's funded in an institutional or academic setting, and then the funding sort of stops and the grants have run out, and people think, okay, well, I've got to make a company now because I need to raise money to test this thesis out. But then companies are formed sometimes too early and then fail. So what we're trying to do is to help people figure out, like, what are the options to fund programs a little bit further, to do those 1 or 2 extra experiments to prove out your thesis before everyone decides to make a company. And so in terms of what we're looking for people who have really thought about, okay, what do I need to do to de-risk this further to be able to convince people to invest in it? Have I explored all those different avenues before I just go straight to building a company? And then being really, really clear about the so what factor. And you hear people talking about this all the time. It gets a bit boring. But sometimes you get scientists who come to you and they tell you all about the exciting science, and they say they're the first ones to be able to do this, and isn't it great? And you sort of think, well, so what happens? Like, what now? Like, what is it going to do? Are you telling me that if this is successful, you'll be able to treat a disease that has no current treatment, for example, versus I'm doing some cool science. No one's ever done it before. It's really cool. But it doesn't.
Yeah.
There's no product. There's no asset. Yeah, exactly.
Yeah, I like that actually for any business. I think that works.
Yeah, exactly. Yeah. So we want people to be able to say, I've spent the last few years working on this. I've managed. This is my thesis, and if I'm right, this is what it means.
Yeah.
This is what it means to patients. And I think all investors do that anyway, but especially when you work for a medical charity, we're very focused on, there must be the emphasis on a patient. You have to be able to tell me what patient could benefit from the work that you're doing. It's really important.
Do they have to go all the way through down to commercial opportunity at that early stage? Or is it more the difference they're making, the problem they're solving type of thing?
I think not in detail. So we wouldn't expect, it goes back to my sort of, are you a scientific founder or are you more of a commercial person? We wouldn't expect someone who's a very exceptional scientist but not commercially minded to be able to do a whole commercial analysis. But if what they're saying is, if I do this, we'll be able to treat a disease that has no treatment, then they should know how many patients have that disease, that kind of stuff. But if they're saying, if we can do this, it will be the 3rd in line treatment for disease XYZ, that's probably less interesting. So they should at least know the basics about the patient population that they're trying to go after. And competition,
Yeah, and so for someone that's been so successful, Claire, as you have, what keeps you pushing on and driving?
That's such a good question. I love a challenge. I do love a challenge. And for me, when I joined LifeArc, they gave me an amazing opportunity. So they said, we know we want to commit to financial investing in life sciences. We know we need a sustainability strategy. We know we want ventures to be part of that. Can you build that? And the trustees of LifeArc have given me all the support and all of the tools and resources that I need to do that. So for me, the last 5 years has been about building the venture investment program and the fund of funds program. And that's really what gets me up in the morning is, that is something to be hugely proud of. LifeArc's quite an exceptional charity to be able to have the vision to do that and commit to that, because sometimes venture investing and charitable giving don't sit naturally together. And so they've been able to say, okay, this is an important part of what the charity is doing. And we are committed to running a fund, committed to hiring a team, and everything that comes with running a venture fund. So seeing all that play out and building a portfolio now of 19 companies, soon to be 20 actually, and watching that all grow.
Congratulations.
Yeah, so yeah, we're very excited. I'll have to come back and tell you which one.
I was about to say, that's not public information yet.
No, we just had it approved yesterday.
Oh,
so
wow.
yeah, I'm really excited about that. But yeah, so all of that is super exciting, and it's fun to see that evolve. And you get the ups and the downs. Biotech's never a straight line.
No.
But that is what makes it exciting.
Yeah. With the new deal, can you tell us anything about the journey to getting that deal done? Because by the way, I'm going to put it on the post because I assume it'll be public information by then. So
Gosh, I hope so.
Yeah. So it'd be interesting to know. Can you tell anything about the journey towards getting that deal done, or what led you to it?
That deal came from a network of investors that we know, and they know that we're interested in this particular therapeutic area. They know that we've been spending time, in particular with one of those investors, talking about this particular general area. And they're very well-funded investors, and they were looking for people who have the ability to invest reasonable ticket size and then follow on if needed. And so through that network, we were introduced to the founders of that company.
And it's therapeutics?
Yes. Yeah.
Watch this space.
Yeah. It's very exciting. So yeah, hopefully we'll have that done in the next couple of weeks.
Final question. How, if anyone's listening to this and wants to reach out to you for various reasons, whether to learn as a mentor, to get tips on how to structure their pitch, all the way through to new founders that are coming through, what would your advice be on how they can reach out to you?
So we have an email address, which is ventures@lifearc.org. That's probably the easiest way to do it, or LinkedIn, obviously. We're really keen to meet potential new founders, people who want to run early stage biotech companies, especially in the UK, but anywhere in the world, really.
Europe or US is more prevalent, or?
We at the moment we have 4 companies, I think, in the US, 1 in Canada, 1 in Scandinavia, and the rest of them are in the UK. But as I said before, we're really agnostic as to where the companies are based. So
you can go back to your Canadian roots, is that?
Yes.
Yeah.
Yes, we love our Canadian company. It's a company called Fluid Biomed, which is a really, really great company. It's actually founded by 2 neurosurgeons who are still actively treating patients, and they are developing a new neurovascular flow diverter, which is very much needed innovation in that space. So we're big fans of that company.
Are there any areas where you're most looking to, or currently have identified gaps in your portfolio where you're most likely to want to invest? So for example, you sold a company to Arcutis in dermatology with Frank Wasanabe.
Yeah.
Anything like that? That's
Well, we are seeing quite a lot in immunology, so that's a very hot space at the moment.
We've seen that as well.
Yeah, it's very, very hot. We're still looking at oncology. There's certain areas of oncology that we like.
Any parts in particular? Or types of, cutting edge XYZ, or? When ADCs is obviously very popular. But
we're looking at a different angle to the ADCs and seeing whether there's any opportunity in there. Neuroscience is a big area for us. We have a few investments in that space now. Biologics, we're big antibody people.
Okay.
So that's always a favorite for us.
Any new areas like medtech or something like that?
We're definitely looking at medical devices. So
Yeah.
Fluid Biomed's a good example of medical device companies that we've only done 1 medical device deal so far, but we're definitely looking to analyze more, do more. We have never done a diagnostics play. We are able to do those, but we're approaching those with some caution. But mostly therapeutics and medical devices.
Do you know how many deals you're looking to do next year?
In terms of new company investments, between 2 to 4.
And average investment size, or?
It varies. We can invest up to 15 million sterling per company.
Yeah.
So depending on the stage of the company, if it's a seed stage company, maybe we wouldn't do less than $1 million. And Series A might be kind of 5 to 10, and then upwards,
And
depending
that's
on,
as either a lead investor or a co-investor. You're open to both.
yeah, exactly.
Great.
Yeah.
Well, thank you so much for joining me today, Claire.
Yeah, nice to be
pleasure.
here. Thank you.